Hey my friend, welcome back to another video. Today we're going to be going through my options trading portfolio, show you guys how I'm managing my positions in this market. And yeah, I find it helps to just like show you guys and be completely transparent with what's happening. And hopefully you guys learn something, get some ideas. Anything in this video is not a suggestion for you to buy, hold, or sell any securities or options in this video, just for educational and informational purposes only. And yeah, and also one more thing, my school community. So basically, there was like a paywall behind it, but now I completely destroyed that paywall, and now the community is going to be completely free for as long as I see. Right now, the goal is changing. I don't want to make money from the school community directly like that. You know, I just want to build the biggest community that I possibly can, and yeah, so things change. So you know, get in now. Community is free. It's a good place right now. We got about 50 members in there, and we're all pretty active, and you know, sharing ideas and posting, and it's really cool. But I want to have thousands of people in this community, and I just want to grow it as big as possible. And yeah, so completely free. We do live calls every Monday, but now we're I haven't announced this yet in the community, but we're actually going to do live calls on. Hopefully Fridays, maybe Wednesdays, trying to get more live sessions out there. That way there can just be as much live engagement as possible, something that's not completely scalable. Just want to be there for everyone in the community. And yeah, so anyway, let's get into the video. Okay, so let's see here. So the portfolio right now, sitting right at 96.9. That is crazy. That's to be honest, guys, that's pretty life changing for me. That's I'm feeling pretty blessed, and you know, unlike a lot of people on YouTube, you know, who have these monster portfolios, sometimes you know, it's like I don't know. It seems like everybody else is like kind of like rich or something. I don't know where they're getting this money, but for me, you know, I'm just a normal guy. I used to drive Uber. I teach music. I'm, you know, just did a couple side projects. Just worked hard, saved money, invested money over time, and worked very hard for my money. And so this money did not come easy. Literally up until couple years ago, I was still driving Uber to pay for one project that I was working on, and yeah, it's just been like a hard road to get to this point, and so I'm really happy and proud with what's happened, but this money did not come easy at all. So yeah, maybe that's a topic for another video. Okay, so yeah, feeling very blessed right now. So year-to-date performance, 74%. 1 year, 106%. That's insane. Okay. So, and this April low could have easily shaken anybody out of the market. And imagine that from this point on, 43, what a ride. What a ride to that point. That April low, insanity. Okay, so in this market, right now what I'm looking, I actually just, okay, so AMD. This market right now it's October 3rd. Let me check. It's October 3rd. 2025. And right now, I would say that in this market, everything is bullish. Things are just now going a bit crazy. If we check the AAII investor sentiment real quick, this is very important. So as we get more and more bullish, this is just making me more and more nervous. You know, October can be a very crazy month. So long story short, I wouldn't be afraid to sell covered calls as kind of like a light hedge. I call it a light hedge because, you know, AMD, these are shares that I don't want to get rid of, but I feel like it's a pretty safe bet to sell. Basically, if you have shares that you don't want to get rid of, you want to go further out of the money and you want to focus less on the premium. I'm going to try to do the 180. Right now the stock is 168. If I sell 180 covered calls, basically for me that's a good situation because worst case in a week, that means AMD is shooting up $12 a share. That's a lot of money. And I have 200 shares, so that's going to go up $2,400. That's a lot of money, plus the premium in only a week time. That's great. Why am I not going like 30 days out? Well, because this is good premium, and that's a good appreciation, but so much can happen. So much can happen. If it goes, 30 days, I mean, this baby could be 180 next week, 190 the next week. We don't know what's going to happen. So I want to have the flexibility to roll, okay? So we're going to go 1 week. It's expiring today. So actually, I had contracts that expired today, but I closed them out just because, sometimes crazy things happen. So sometimes I don't like to let it just expire if it's like right on the cusp, okay? So 180 covered calls. If I do that, I'm getting basically a 0.5% return for the week. And then I have the flexibility. So if you don't know what a covered call is, basically if you have the shares, you put it as collateral. Essentially what you're doing is you're doing a conditional selling order, essentially. So 180, somebody on the other end is buying a call, which means by next week, they're basically paying $90 for the stock to basically blow past 180 by expiration. Maybe if there's like a short-term violent move, they make some money real quick and get out, but that time decay is gonna decay pretty fast. So we're basically making money off people gambling, essentially. Because 7 days, we're going to get paid that premium that somebody else is gambling. They're going to give it to us because we're essentially the casino, right? We're the house. So we're going to put our shares as collateral. Now, if the stock goes up past 180, if it goes to 185, 190, then we're technically, have that obligation to sell it. But what we can do is we can roll it, which that's another topic for another video, or you can go to my channel and I have other videos on the topic of rolling. But I like to sell calls 1 week out, maybe 2, but usually shortest time possible because you have a lot more flexibility to save trades and maneuver around, okay? So what I'm going to do is sell 2 covered calls. Let's see here. Let's see if this fills. I have a tendency to not get filled when yeah, okay. Always happens. Okay, 90. Let's not get greedy, right there. Submit. Bada bing, bada boom. So right now that was $180. Sitting on my butt. Doing nothing, okay? Not really doing nothing, I'm taking on the risk of the trade, but compared to any other work that I've done in the past, which was, back-breaking, grueling, stressful work, this is walk in the park, walk in the park. Okay, so let's keep going. Let's see, we got a lot of positions to cover. Okay, so AMDL, let's just go through the gambit. So AMDL, so that's a leverage position on AMD, which this is a call. Yeah, this is a call, $10 call. So what I'm going to do, essentially, I'm forced to sell the shares at $10 because the stock price went up past it. It's now currently 11.18. Now, the way I like to think of this is, so I'm essentially going to roll it. I could let it expire, just sell it. I mean, I made money. It'll say total return negative because that's essentially like the contract value. Basically like lost money on like the contract value because I left money on the table, but I didn't actually lose money. Okay, so let's see here. So if I roll this, rolling, you're essentially closing a position and opening another position at a later date, usually. So roll. So let's see. So if I close this $10 call for 120, I would have to pay $120. But if okay, so if I keep the same $10 strike, I'll go to 135. I'll actually get a credit. Now let's see. I'm actually going to go 2 weeks. Let's see what happens here. Okay. So what I'm going to do, there's really no right or wrong answer. If I do the 1050, what happens is I'll I'll get that 50 cents of price appreciation if I think AMD will kind of continue where it's at, and I'll basically get a break even. Or I could do the $10, which is like the same situation. You know, instead of me being forced to sell it at $10 right now, I'll be forced to sell it at $10 in 2 weeks. But here I'm going to get a $30 credit. So that's a 3% return, and I'm in the same situation. So I'm actually going to do, I call it a lateral roll. I don't know what the technical term for that is, but I just call it a lateral roll. Why not? Okay, so let's see if I get filled for that. Come on. Okay, replace. We might have to go down. Let's see here, 150. So 2 weeks, I'm getting a 3% return on that. Let's see, 2.5. That'll fill. 25 bucks. 2.5% return for my lateral roll. And we'll see. You never know what could happen. So I just want to get that premium. I was fine to let it go at 10. So now we're still fine. Now, but I'm getting premium. So that eats into my actual cost basis. Okay, let's see here. AMDL $10 put. So what I'm going to do is I'm actually going to, well, let's see. Let's see here. Let's see what happens if we roll. $10 put. You know, I'm just going to let this one expire because I want to get the cash out and roll that into more trades. I have a lot of AMD exposure. So let me just let that expire. 1050 put, let that expire. Okay, Celsius, $59 put. So this is interesting because Celsius, I was on a cruise last week. I had no internet connection basically. And Celsius basically dropped to like 51. And actually when I got back, it was still low. It was right around, I was thinking about selling Leap or buying Leaps right here, right there. That would have been such a good decision. But the thing is, I didn't want to get greedy in this market because anything can happen. So yeah, anyway, so Celsius had a monster run, 14% in a week. Let's see, let's go back here. Celsius is a big underrated company. They have super high growth rates now with the acquisition of Alani Nu and Rockstar Energy, and yeah, they're just killing it. So let's see, $59 put, $22, 21. Okay, so let's see what happens. 96% up, expires today. What I could do is let it expire and get the $20, right? And then that'll, you know, anything could happen. It could also drop down below this $59 strike, and then I would end up actually acquiring the shares at 59, which sounded crazy when the stock was 52, but now the stock is 59. It doesn't sound so crazy anymore. So now let's see what happens if we roll. Let's see what the options are. And because it's a short put roll, or a put, with puts, you know, it's not the same as the covered call where you want to go out shorter time and have that flexibility. With puts, I feel a lot better actually going further out in time. But let's just take a look at some of these premiums. So because I really like Celsius, I'm not, let's see here. Okay, 7 days, a $59 put is going to be 130. That's actually pretty good. 17th, 195. That's a lot. 24th, 240. Yeah, the premiums are pretty good for this. So usually when you sell puts, you know, the general rule of thumb is, okay, get a 0.3 delta, right? But you got to know the rules so that you could break the rules sometimes, okay? So I'm actually going to do this. I'm actually going to roll. I'm going to pay about 13 cents for this. Now I'm going to do a very aggressive put. Essentially for 2 weeks, I'm going to get paid 200 bucks, okay? So now I'm paying 12 cents here. And the reason I'm going to roll this instead of letting it expire is because anything can happen. I just want to take this opportunity to lock in this premium right now. Because, yeah, basically over the weekend. I don't know. I just want to take it right now. I don't want to miss the opportunity. So yeah, basically gonna roll that. Gonna get a credit of 185 because I'm paying 12 cents to open the $59 put, and I'm gonna to close it, and I'm gonna buy. Yeah, sorry, my words are getting mixed up. I'm going to close, buy to close, and then I'm going to sell to open a new position. 184 bucks in my pocket. Okay. 14 days, October 17th. That's traditional expiration. Let's see, the bid and the ask a little wonky. So 182. Let's see. Let's go for 180. Yeah. Submit. Okay, so we rolled that position. Okay, so let's see here. So next position, we have a $56 put. We have two of those. So this one, we're going to actually let ride. We're just going to let that one expire, the $56 put. And actually, let's just see what happens if we rolled. Because I just want to get that cash. And yeah, that'll kind of be my, I call it a light hedge too. It's just having some cash, right? I got no cash basically. So Celsius $56 put. Actually, it's $1. Let's let it ride. Yeah. Okay. So $56 put on Celsius. Let that ride. SoFi 29.50 call. That one expires today. Thank you. Okay, so that one basically I was kind of rolling that one, and I was actually kind of afraid to let those go too early. So SoFi's pulled back a bit, right about 25 something. Sorry, went off the 25.33. That's totally fine. Totally happy for a little pullback because I also have another call here, and I took the opportunity to also sell a SoFi put, aggressive put at 27, and now it's 25. So not ideal, but I want the shares, and I want more exposure to SoFi, and I don't want to let those shares go. So yeah. What else we got? So SoFi, AMD, those are the calls I just sold today. AMDL put. This expires 10/17. So that has a couple, some time to it. So we're just gonna do nothing. We're in a good position there. AMDL put, $10 put, again, 10/17. So hopefully those expire pretty good and we can get the cash. And same thing here, $10 call, 150, we're in the money. So, but that has a lot more time. So when there's time, we're just gonna do nothing in this situation. AMDL put, $9 put, 10/17, a lot of 10/17. Dutch Bros. Okay, Dutch Bros 50.47. Dutch Bros I think is really bullish. Some news articles I've been reading. It's just there's things in the consumer kind of like consumer like food and coffee and things like this. They've all kind of been going down a little bit lately, but the company is a solid company. Their last earnings were awesome. And they're planning to open 2,029 stores by 2029. Right now they have roughly around 1,000 stores or so. I mean, you do the loose math. If they get remotely close to that goal, I mean, their revenues and their incomes are going to be just a lot higher than they are today. So we'll see what happens. $50.54. After their earnings, there was a big shoot up in the price. I think it was probably this date, August 6th. The earnings were so good, it went from $56, $57 to $70. So right now we're below that area. Plus they had the good earnings. I think their PE is maybe a little bit high-ish compared to for a coffee company, but they got growth. I think they're doing really well. So actually, what we're gonna do, so I keep fidgeting and doing stuff. What we're gonna do is I'm just gonna buy a couple shares. Let's just buy a couple. Yeah, let's just buy. Yeah, if I just buy 5 shares, $50. That's okay. It's adding to the position. Let's buy 5 of those. Buy. And that's it. Cool. So right now, yeah, if you don't have like enough money for like a contract and there's a really good company, just buy some shares. Buy and hold. That's fine. That's really good. Same thing with Celsius. Like I think Celsius long term is going to 100 plus. So, let's buy a couple of these. Let's do 3 shares. Do I have enough? I don't think so. Just buy 2 shares. Why not? Okay, so now I'm back to no money. Okay, 29 bucks. You know what? Why not buy a share of SoFi? Why not? Why not? Let's do it. SoFi. Let's buy one. Okay, that's it. All right. Let's do it. Okay, let's move on. Let's see what else we got. So bros, yeah, so I have a $62 put there. And then yeah, so one way to hedge is just buy and hold, buy bros at 50, sold a put at 62. Now, hopefully the price goes up closer to that 17th. Right now it's negative 1200, so if I wanted to buy back the contract today, it would be 1200 because a lot of that is like the difference in this price. But I got paid like 200 something bucks for the premium, so the actual total negative return if I bought the contract back would be that 980. But let's just take a look. Like in the worst case scenario, this is like one of the worst case scenarios that could happen with selling puts, but this is why we sell puts, because there's flexibility. So if I rolled, for example, let's say it was expiration day and I needed to roll to do something. And now what I can do, I mean, I sold a 6250 put originally, right? You see that here, 62.5. So if it was, let's see if they have another date that has a 62.5. Oh no, it'd be, let's see here. Because, yeah, they don't have it. But, for example, if I did, let's say if I did 63, if I did a 63, you'll get roughly this same. So if I needed to just expand it like an extra week from the 17th to the 24th, essentially I could just keep that same strike-ish and be around a break-even-ish and still be good. And while I wait for more time for the stock to do something, I could go further out in expiration. Let's say I wanted to do the 21st. I don't, but let's just say it. Yeah, because it's so deep in the money, I'm not really getting much. I'll get about $100 to keep that same strike, but roll it out a lot of time. And that would basically just give me more time for the stock to do something until I see a more favorable opportunity. But for now, I'm just going to wait till October 17th. That's 14 days. And hopefully there will be a better opportunity there to roll and make some more premium. Or worst case, too, also get assigned, then wait to sell covered calls. So, yeah. So yeah, not a bad position. I mean, $60 when the stock is $50 is not ideal. But when the stock goes to $70, hypothetically, then it doesn't look so bad, right? So hindsight's always 20/20, right? Here, this is the $59 put we rolled. Here I have a 57.50 covered call on Celsius for 10.17. And yeah, so here, we're in the money now, and just gonna wait, give it some more time before we make any decisions on that. And yeah, SoFi, I'm hoping these expire under 28, so I'm hoping like SoFi just does nothing. Just do nothing, SoFi. That's it. Just do nothing. Hopefully I could either buy back the contracts. That way I don't have any contracts on SoFi through the earnings, because through the earnings, I want to be able to hold the shares just in case something exciting happens. SoFi just such a good opportunity long term. Okay. And yeah, and SoFi 27 put, this is the one I sold. I also have a crypto position. I don't talk about this much, but we'll see what happens. I was thinking about potentially selling all of it just to get some cash, because if something happens in October and basically everything goes down for whatever reason, kind of 2018 style going into December, into the winter, I want some cash. I want some cash to anything that's like remotely volatile and speculative. It's going to go down harder than everything else, right? So here I got about almost 12 grand. That's 12 grand. That's yeah, just in there doing nothing. So I got no cash here. But I'm thinking, right now, let's take a look at the VIX real quick. VIX, I really want to hedge. Like, just need a VIX. Who are these people? What the heck? What is this? Who are they? Who are these people? Okay, anyway, VIX index. That was scary. Okay. VIX 16. I don't know. I really don't know, because I really do want to have some cash laying around, and right now, and this is not going to be an actual loss, by the way. I accidentally sold like all of it instead of buying some. It was an accident, so then I had to rebuy here. So this is not a real loss of $1,000. It's just kind of looks strange, but. Yeah, let's see. Okay, so yeah, I do want a hedge. I do want some cash laying around. Sorry, I'm kind of floundering because I don't know. I don't really want to sell it. I'll just hold it. I hope this video was valuable for you, seeing how I go through the options trading and, my thought process and how I manage positions. If you want to go deeper with your options trading, please join the link in the pinned comment. It is free. In other videos, I advertised it as a paid community. No longer a paid community. Change my goals with it. I just want to grow this thing as big as possible. And I want to help you guys, make good decisions and, educate you guys on how, how to do this successfully, and, and just form a community and, be there for each other. And I'm also learning from you guys. So it's a great place to meet up and talk about trades we're doing and, hype each other up and, brainstorm, mastermind, all that good stuff. So pinned comment, please join the school community. It's a good time over there. We do live trading calls on Mondays and going to expand that out into other days as well. And yeah, where else are you going to get that kind of community with live trading calls for absolutely free? So yeah, please join. It's a party over there. And yeah, I'll see you there. All right. See you in the next video.